Welcome. You have just entered the trading pit, your home for sophisticated takes on the crypto markets. It's April 30th, your last day in April, and here in the studio, JJ and Ben Lilly of J Labs. I am your host, Marconi White. Today, we are unpacking Bitcoin's ongoing crab walk. Of course, looking at a little bit of rapid pace as the market nukes. We're going to be asking what happens with all these altcoin unlocks, what they're going to do to the market, and of course, what are you going to do with all that profits you're sitting on? You better still have some. But first, it's rapid fire, where I look for simple answers to complex questions. Get these guys revved up. Gentlemen, let's get started. Ben, I'm going to kick it off with you. Jack Muller was on a podcast recently. He said Bitcoin is definitely headed to 1 million this cycle. Too bullish or not bullish enough?
Too bullish. He's got a product to sell.
Oh, the incentives are all wrong. Wow, he must be the only one in crypto. JJ, the 6 Hong Kong ETFs registered a first day trading volume of just 11 million and expectations of over 125 million. Do we shrug it off, or is this a warning sign?
Well, I guess the good news is it can only go up from here, right? It's about as close to zero as you could get. So it's just the sign of the times. I think everybody's waiting for some kind of decision from the market before jumping in. So
all right, so it's we can shrug it off because we're already on the ground floor. We don't have to worry about going too much lower. All right, Ben, Eigen Layer announces a universal intersubjective token. Was this the worst name for a token type ever?
They should get an award for how bad this was. So I guess UI for short. That makes me worry about what the UI is going to be when it comes down to it.
It sounds like an STD. I think we need to give Razzie Awards. Maybe that's something we'll start on our show. Start giving out Razzie Awards to crypto for poor branding. All right, JJ, looking into Bitcoin reports that the Puell Multiple reset to levels not seen since February 25th, 2023, when Bitcoin was just 23,000. They're saying this is the best risk reward in a long time. Is this alpha, or are they missing the forest for the trees?
I think from a macro perspective, it's probably great alpha. But if you look at like February 25th, I think 2 weeks later, we dropped by about 25%. There was the SVB collapse. So if you zoom out, great risk reward, but that doesn't mean you can't go 25 to 30% lower in the near term here.
Oh, way to bring the optimism there. All right. Well, so definitely your time preference matters tremendously. Ben, is Ethereum a commodity, security, or something else?
Let me grab my soapbox here real quick. No, I'm just kidding. I mean, if it's a security, then we have to reclassify oil. So.
Yes, well, that's been my soapbox for 25 years. So maybe we'll finally make it happen. JJ, last one, Jake Paul versus Mike Tyson on July 20th. Who wins and in which round?
I'm going with Jake Paul. You know, I don't like the guy, but he's a good enough boxer. And I think it's a bit like pro wrestling. I think it's kind of staged. So I think Mike Tyson takes a dive in round 4, collects a nice big paycheck, and the hype continues.
Mike Tyson takes a dive in round 4. Ben, I want to get your take. Are you in agreement? I mean, you know, JJ is the resident fighter here. He's going to have a lot that he can share on that front. But do you agree with that take?
You know, I'd have no insight here, and I have to. If we look at the incentives here, it does make sense, as JJ mentioned. The hype for the next match with Jake Paul would be too lucrative.
It's professional wrestling. You got to see it for what it is.
It's the K-fob. Okay. All right. Well, there you have it. If you want to take bets on Mike Tyson going down in round 4, tell your bookie you heard it here first on on the trading pit. I want to give it a shout out. Welcome. We got Light Signature, Gabrielle, and Gary in the chat. Love to have you here. Definitely hit that like and subscribe button. Share this wherever you are. You want to be sharing with other people that want to hear some takes on the market. I know we're going to be getting a little bit into profit taking, as well as the Eigen Layer fiasco. But first, we're just going to dive into the market action, as the markets have just recoiled after the brutal launch of these Hong Kong ETFs. I took a look this morning, JJ. Bitcoin was all the way down to 6,100, just barely keeping on to 61,000. Ethereum doing the same, around 3,000. And Sol, man, what a sell-off, down all the way at $128, down 6%. Nice. But that'd be a boom. Yeah, wouldn't you want to see that? And the ETFs were absolutely crushed. We had 4 days in which IBIT has had zero inflows. yesterday was down 51.6 million of outflows. So JJ, what are we looking at right now? I mean, the catalyst that we're hearing is that the Hong Kong futures or the Hong Kong ETFs really underperformed, the mass sell-off overnight, and now it's trickling into the New York session. What are you seeing? And are we going to have, what kind of bounce back are we going to have? Or is it going to continue to be a crab walk?
It's just been this continual crab. So it's kind of like that scenario we outlined a couple weeks back after the big drop. This was kind of the scenario we were favoring, where price just stays in a confined range. And it's been doing that pretty well, just equally chopping up longs and shorts. So we had that big sell-off a couple weeks ago, bounced back, but didn't reclaim the trend. And now we see it fading back to the low end of the range. I think we'll probably see some kind of bounce back here in the next day or two, wipe out some over leveraged shorts, and then we just continue this crab walk for the foreseeable future. But it doesn't seem there's an outside chance we could see the 60K wall break, and that could bring some increased selling. I'm sure we'll get into that later when we discuss the options market. But for now, it just seems like more of the same continued crab walk. Everybody's kind of waiting on FOMC, and obviously to see what the Dixie does, and that'll drive our next direction from here into May.
Yeah, so JJ, I want to ask about sort of that that point about seeing the market sell off, and we have someone here, Max Meyer, who's new to Bitcoin. He's asking whether or not this is a good time to be DCing again. Max, we will be getting into positioning a little bit later. Maybe we'll touch on that. Good question, but maybe we'll get to that a little bit sooner. But you were saying off air that all the signs were the same. Nothing had changed going into this Hong Kong ETFs. They were being blown up a little bit on social. I saw this yesterday on X about, again, this $125 million bogey that they were looking for. And yet you see the numbers come in, obviously 10% of that on a trade volume, very underwhelming. But did the numbers in the charts and the data you were looking at, did they tell that story? Was it telegraphed before the day even came?
Yeah, we've seen it. It's really been signified by this implied volatility chart, which has just fallen off a cliff. So I think if these were to be anything to be market moving, we would have seen implied volatility levels fly the way they did prior to the ETFs in January, right? So before the US ETFs launched, we saw this huge leg up in implied volatility because the market knew a large move was coming. I think this move was about 40 to 48K when we really saw the IV level spike, and obviously they were spiking up from October as well the whole way through. And this was the opposite. So everybody knew these ETFs were coming, but IV levels were falling. Price was losing momentum. It just seemed highly unlikely that we would see kind of any real big move overnight just on a whim like that, right? Like it would have been if those kind of flows were coming, somebody would have known. They would have been placing big bets ahead of time, and they would have been raking in profits today, and we just didn't see that. Instead, we saw volatility selling, which was the market just expressing this view that price isn't going anywhere, likely until we see what FOMC has in store for this week. I guess it seems like everybody's kind of waiting on bated breath to see what the decision is there.
We're waiting for the macro tail to wag the crypto dog. Ben, I want to get your take if you have any concerns when you see this lackluster performance on an ETF. I think JJ just laid out the perspective that there wasn't anything in the chart saying that the ETFs are going to be a big deal. I think Benjamin, when he's been on the show, he's kind of echoed the same thing, that people have had exposure to these products for a long time. There isn't a whole lot more that the ETF is going to offer. But I mean, if you take that and combine it with what we're seeing on the ETFs, with IBIT, having 4 days of no inflows, seeing some of these outflows, is there any concern in your mind that this is a warning sign, or is this exactly what you expected as we went into this period of institutional adoption?
Yeah, I mean, it was very euphoric for a long period of time, and just those moments just need a reset. And unfortunately, what we saw today in terms of the amount of demand that the new ETF pulled in, this was negative news in sort of a negative price environment. And so what does bad news in a bear market do? It brings price down. And so if you even had sort of bullish sentiment around what just happened, price might not even react to it. And so this is just indication, just see the news, see how price responds, and it's just kind of telling you what environment we're currently in. And just don't get too caught up on if this is the direction that the market's going for maybe until for the rest of May, perhaps. Don't get yourself don't leave the market. Essentially stay attuned to it, be ready to start acting, because it will come around. This is just a normal kind of price action that takes place around the halving. It was something I wrote about last week. If you look back historically, the 4 to 6 weeks that follow a halving event, don't expect to see any significant price action to the upside. It's really just been sideways, and if anything, it sags. So this is just almost confirmation that we're just getting ready for the meatiest part of the market.
Oh, media is part of the market. That should give some folks who are feeling a little sad this morning a little bit of optimism. Well, JJ, I want to take that sentiment. As Ben just mentioned, he's wrote about the fact that don't look for any kind of euphoria coming directly after the halving. This is, you're going to see maybe some sag in the price action. But from an options perspective, what are you seeing as we start to move forward through May, maybe even further into the summer? This crab walk has been going, excuse me, a couple of weeks. Does the options market signal it's going to continue on for a long period of time?
Yeah, so if we look at the IV term structure chart, this is a nice comparison. We wrote about this last week, just of how much euphoria was sucked out of the options market over the past month or so. So you see this dark blue line. This shows us what the IV term structure was showing at the end of March, and now we see it by comparison here. So you see, like, say, the end of May expiry. It's currently around 55 implied volatility level. Back in March, this was at 77. That's a pretty steep drop off for IV. It just shows like how that whole run up from 50K to 74K, people were really reaching the options market. Like we discussed, a lot of that was driven by dealer positioning. They had to buy calls, which is driving up the price of calls, this whole kind of reflexive dynamic. And then when price finally found some resistance, slowed down, all of those calls just kind of they fell off a cliff, right? The implied volatility levels got washed out, the premiums died down, and now we see like the opposite effect, where now nobody wants these calls. In fact, people are selling volatility, and that's become the popular trade. And it's just kind of this reflexive nature of options market. When things are running hot, everybody wants exposure. When they're not, nobody wants it at all. There's a current interesting setup that we see with a lot of 60K and 59K puts lining up, and these expire this Friday. So if price is to break below this range, we could see some heavy selling. If we look at the dealer positioning chart here, we see that dealers are short a lot of gamma at 59K in particular and 58K. So that could bring about some kind of quick release to new lows here. Like you could see this drop down below potentially 58K, wick down if that 60K level is taken out. Something to be mindful of. There's a lot of bids stacking up. If we look at our bid-ask ratio chart, it's not pulling up. But if we look here at the order books on Coinbase as well as Binance Spot, see a lot of bids below these current range. These are likely option sellers who sold those puts, protecting those positions. So I think it's more likely that we see a squeeze here in the next day or two rather than that breakdown below 60K, but always something to be aware of when the dealers are short those contracts, because it could turn into quick price action rather quickly as they hedge those positions by selling spot futures.
So I'm not really seeing anything that's going to tell me where what's going to change or when this is going to change. We may see a squeeze above that level, but still the same crab walk. What about from an accumulation standpoint? I mean, we've oftentimes looked at the whale chart trying to see if those are continuing to accumulate. Have we seen any change in their behavior that would suggest that this is a time for accumulation?
It's still been accumulation. So you see here on the red dots, if I put this on a 1-year chart, you can see it clear. So it's just been accumulation basically since the end of March. There's been these yellow and red lines indicate whale wallets on net accumulating Bitcoin, and that's continued. So I think this is probably a good spot, and it seems to fit with the trend that we would just chop from here rather than that big breakdown below 60K and squeeze it. It's probably just going to go back up to the upside, squeeze out some shorts, and then we fade back down for another week or two until we see some real signs of life from the volatility index. Like what you would want to see is a break beyond this range. So I think that's kind of 60K to 65, 67K. And as price starts to move either below 60K or above that 65, 67 range, you'd want to see this implied volatility index rising with it. And that would be a sign that options players are starting to take bets in the direction of price, and we're going to be in for some expansion. But until you see that, you could just assume movements within this range are just continued chop, crab walk, whatever you want to call it.
Yeah. Okay. Well, what just give us some ranges again for those are listening, because I know we're always kind of updating those. What do you see as kind of the lower bound, maybe based on the 100 or 200, and kind of what you would expect to see if we see a squeeze going higher?
So I think this is basically the lower bound here. You see this lower end of the Bollinger Band. This is held pretty reliably here, even going back to January. We retested the bottom there, bounced off it. We've retested it 3 times now since March. It's been holding. So don't really want to see price fall below there for any meaningful amount of time. It could bounce from the 100-day. Anything below this 100-day, around 59, 58 for any longer than a day or so would be extremely worrisome. And that would obviously open up the odds of a 200-day retest. So you really don't want to see that. Ideally, price would bounce from here and just continue to crab for a couple more weeks. I think if we look at some liquidity charts, connection timed out, but I did tweet this earlier, so let me pull that up.
And Ben, while he's pulling that up, I do want to ask, get your thoughts on kind of holding alts through this period, this crab walk period. We can talk a little bit about that, but Ben, sorry, JJ, go on.
So here's that liquidity chart. So I think you could see, like you see this large concentration of short liquidity pools around 65, 66K. I think that could be a realistic target for this week if FOMC's perhaps dovish. I think you could see a bounce back to there and then just most likely continue chop for another week or two. If we do see price obviously move up to 67K, take out these 68, along with the implied volatility index rising, I think that's a good sign that we're headed for higher highs, and you should probably get on board then. But the market will confirm it, right? So there's no need to rush into position when there's this much uncertainty heading into the next couple of days. It's just kind of a wait and see type thing right now.
Wait and see. So Ben, I want to ask your perspective on holding any kind of alternative assets. I mean, that's the tail of the tape for Bitcoin. If you're thinking about Ethereum or maybe even some of these other alts going further down the risk curve, how do you think people are thinking about their risk exposure during this crab walk?
I mean, I think a bit of it is just a realization of kind of what these drawdowns look like and how steep they can go, as well as kind of the duration. You know, how long do these movements take? I think we can look at some of the most popular tokens over the last 9 months, and Celestia was definitely one of them. And that's kind of the low float model that we saw. And pulling it up on a chart, it topped out just, what was that, early February. And it's just been a slow grind lower, almost 60% drawdown from its top. And is that something that anybody that bought into the hype was expecting? Probably not. When they think about risk perspective, was that really taken into account when they thought about their portfolio or moving down that risk curve and how quickly they were going to be moving it down that risk curve and back out? I can't imagine so. And so this is just a good kind of relearning moment. And anybody that's new this cycle, which my guess is you're probably not listening because we tend to have a lot of kind of veterans that are, we call listeners here and readers of Espresso. But in case you did find us and you are one of the newer individuals, this next part of the cycle is when you start going down the risk curve. Not this next part of the cycle, but essentially after the halving, when price starts to heat up and you see large caps, Bitcoin, Ethereum, and other large cap L1s start moving significantly, generating wealth within each of their ecosystems. And then you'll see the smaller tokens float up and rise and run hot as well. And that's kind of when I say the meatiest part of the market, that's, I don't want to say more orderly walk down the risk curve, but that's when you go ahead and do that again. And this is just kind of case in point. And a little bit of this is, I think we'll get into later, of just, fully diluted value tokens with very low float at launch, causing a lot of this kind of continued sell pressure.
Yeah, I think that's a good perspective. I know, Adrian, you have a question here about thoughts on Eigen Layer launch criteria being heavily influenced by regulatory concerns, the usual VC soul-sucking narratives. I like soul-sucking narratives, Adrian. That's good framing for it, because we've talked a lot about that offline. We are going to get to at least touch a little bit on the Eigen Layer fiasco and some of that low float. But I think the perspective there being that if you're in some of these alts and they have seen a low grind down, you really have to have a long-term time horizon. Obviously, you want to be investing in things and buying things that you perceive as to have higher value, higher future value based on their ability to acquire customers and add to an ecosystem, rather than something that maybe on this show we just call a meme coin, which is basically no promise at all, just trying to go on hype and narrative. So I think just to summarize where we are here from a market perspective, we're continuing to crab walk. No real signs, even though we've seen the sell off of 5% over the last 24 hours. No real signs that this is anything out of, anything other than sort of garden variety sell off during this period. The whales are continuing to accumulate, and the market is still positioned both higher and lower from an options perspective. So if you're looking about DCAing in to Bitcoin and maybe some of these other tokens, just kind of be aware of where we are in the cycle, and whether or not you want to be playing the way the big dogs are playing, or you want to figure out your own risk path. Okay, let's transition, talk a little bit about the macro, because we talked about the tail wagging the dog. We've got FOMC coming up. JJ, you mentioned that being dovish. Obviously, we're always looking at the Dixie. And then, of course, since we have been here, we can talk a little bit about rates if there's something that's kind of striking a chord, something that needs to be known. But definitely, I want to give a shout out to everyone who's joined us. Welcome, welcome. Love to have you guys here. If you haven't already, hit the like and subscribe button. Definitely share this wherever you can with others who want to hear avatars give a sophisticated analysis of the market beyond the hype. Love to have more people join us as we're on this mission. And we're definitely working behind the scenes. The producers on this show, everyone who's on the show is working to bring yet a new experience that I know every single person here is going to enjoy. It's going to be a better way to interact with us, as well as the information that we share here. So definitely stay tuned. You're going to want to know when that comes out. So JJ, walk us through what you're seeing for the Dixie right now. Has your risk profile changed at all? Anything that's kind of struck out at you that says, I'm a little bit more concerned about the Dixie because it's been running hot for a while?
Yeah, it's just been continually strong, right? Even yesterday's sell-off, it didn't break trend at all. It's just recovered that. It's right back to the 106 range. And it's showing no signs of slowing down. It's going to take something that the market's not prepared for tomorrow in terms of dovishness to really send this lower. If you look at the rates market now, these just keep going lower and lower every time they try to find a bottom here. These are the December federal funds futures. So when these go down, that's the market's expectations of rates cuts dropping. And there's basically now no rate cuts priced in for this year. So it would take the Fed to reverse that course and bring out some language that would ultimately weaken the Dixie tomorrow. And that's what the market's waiting on. So until the market gets that confirmation from the Fed that, hey, rate cuts are coming, I don't think the Dixie is going to slow down at all, despite kind of these FX headwinds in terms of what happened with the yen over the weekend and whatnot. It's just the dollar wrecking ball is doing its thing. As we pointed out, these are kind of the telltale signs is that things get dysfunctional when the Dixie gets too hot. And that's what we're seeing here. It's just continuing to go on a tear. And there's no need to call a top on it just yet. Wait for that confirmation tomorrow or some kind of language that comes out that says, hey, they're weakening it. And that would be your opportunity for entry into risk. For now, it's just looking like more of the same. It's just been in this uptrend and doesn't show any signs of stopping.
Okay, so the rates, the likelihood of a rate cut this year continues to go down. Dixie continues to remain strong, as you said, wreaking havoc all across the globe. Ben, I want to get your perspective. You've been talking for a while, waiting for that conversation to really come up, not just about rate cuts being off the table, but perhaps a rate hike. Are you seeing something that's starting to push that narrative, starting to percolate up a little bit? And are we getting closer to that in game where maybe a rate cut, an actual rate cut, not just something the market's anticipating, could be on the table?
That conversation is here. And even this morning, listening to Bloomberg just discuss what will be taking place tomorrow in the FOMC, questions are going to arise. Are we still at kind of this terminal rate here, or should we be thinking about higher? That question is expected to come up tomorrow. And how is Powell going to respond? I don't think he can say, like, this is terminal rates anymore. I don't think he has that luxury. So he's going to have to address it. And how is the market going to digest that? I really don't know. We're just going to have to wait and see here. But there's a lot of events coming up. Just the whole fact that, hey, maybe this isn't terminal rates. That's one of the events here. You got Yellen, I believe, next week is getting ready to do its kind of refinancing announcement for the Treasury, which is basically what are the next 3 months going to look like in terms of how much debt is she issuing at what term is that debt going to be issued at, and then if there's really going to be any changes in terms of their policy in general, that comes out here soon. And so you kind of have a confluence of events taking shape here that May is just not looking good right now, unfortunately. So I'm very curious to see how Powell handles tomorrow.
What
is that potentially the outlook is so bad that the slightest bit of dovishness could reverse this rather quickly. Like you kind of have basically no rate cuts priced in now, so the slightest bit of hopium could cause a rebound rally, but whether or not that'll actually be sustained, that's kind of remains to be what we're waiting on here.
Well,
yeah, it's definitely one way to look at it. I don't think we're going to quite get it yet, though. That's just what my gut's saying. Like, I feel like we need a little bit of a kind of a capitulation moment for sentiment when it comes to rates, and I don't think we're quite there yet. Like, we're very close in my mind, but I think like if we were to look at this as a price chart, I think we need to just kind of wick higher or lower in terms of could rates be higher. And once kind of that sentiment's reached, then we'll go ahead and start moving in the other direction.
Well, I want to put on the table, we haven't really seen events that we've been talking about now for over a year that we would expect to happen if the Fed was going to be forced into sort of rate cuts. And so, the labor markets continue to remain stronger than perhaps some expected. On the ground data maybe tells a different story, but I think from the information that the Fed's using, they look at that and say, well, labor looks robust. We haven't seen cracks in the real estate market yet, commercial real estate, commercial paper. There are the signs that we would expect to see from a market that's about to implode that requires resuscitation and emergency services hasn't yet hit yet. So with that, are we going to be? I feel as though we need to be asking ourselves, when are those going to happen, and is that going to be the catalyst for something to change? Because inflation remains sticky.
I mean, it sounds like it's starting to percolate a little bit. You have conversations around what's happening in Japan with the yen and the fact that they might need to go ahead and start selling treasuries into the market. You have a lot of kind of corporate real estate sales happening, I believe, in New York with major and steep discounts place in terms of just like hundreds of $1 million worth of property exchanging hands at like 50% discount or more. So you do have that starting to trickle up, and you still have the market just trying to call the bluff on the labor market that it's really not as strong as it's being depicted as, and they just can't really all like have consensus on a similar data point to say, look, see, it's really not as strong as you're making it out to be, and we're not going to have rate hikes. We're going to have a cut here. It's like you're still seeing this start to play out. They say spreads are doing well, but when you go down in terms of kind of the uglier debt, if you will, on corporate bonds, there's starting to be a bit of a split in terms of the paper. Oop, did I lose you guys?
No,
You still hear me okay?
Yeah, no, I can still hear you. You're still good.
Okay, yeah. So they're really just saying like they're starting to figure out which businesses are really going to get hit if rates continue to stay elevated, and then the spreads are widening. The yields are kind of showing that. So the pricing is there. There is kind of risk that exists in the debt market that's starting to show itself, but the spreads haven't really widened as much as you would almost expect. But there are a few things starting to circle around.
So we're starting to get hot, but the flames aren't hot enough to force that emergency service that would actually cut for either a liquidity injection or some kind of rate cut that would really signal to the market that the doves have taken over.
There's also the regional banks too, right? Like
Mm-hmm.
we've just kind of become immune to banks failing. It just kind of seems like a normal, like we're in this like weird state where we're just like, oh yeah, a bank failed. It's not really a big deal. But I'd imagine at some point like that kind of crescendos if they don't do something one
Yeah.
way or the other.
Yeah,
Like
it always
won't be
starts
small
with
banks.
one, right? It starts with a
Yeah.
drip, and then the drip picks up and then becomes more. I mean, if we have to kind of take a step back, and when rates start to get elevated like this, this is a deleveraging move in the market. And basically it's just debt needs to get consolidated. It needs to come down. And that's just a byproduct of what happens. And so we need to see it still. And we're just starting to see it take place, you have the bank failure, you have a bunch of corporate real estate getting sold at a discount, and then you have essentially yields starting to spike on some corporate bonds, but those are essentially attached to companies that really can't do this. And as somebody said, I forget who it was in the fixed income markets, but they were just saying that, look, those that are starting to file for BK have filed for BK previously. Like the leadership teams that were poor before are still poor. So it's almost like an expectation that, yep, okay, all right, we'll wash you out, we'll move on. But the good companies are the good companies.
Okay. All right. Well, if you're looking to really figure out what's going to happen with the Fed, it's obviously a very murky picture. But I think, Ben, you have pointed out there are cracks. We're starting to see them. Really, again, it's going to be a question of how wide they get, how quickly, and then really force the hand of the Fed. And so I think again, to summarize where we are right now, as we go into May, things aren't looking great from a macro perspective. We continue to see some pressure on risk assets such as crypto, definitely Bitcoin, and then going further down the risk curve. Something to keep in mind if you're looking at DCAing and you have some powder. And of course, we're going to get to positioning a little bit later on the show. But right now, I do want to transition, talk a little bit about profitability, because JJ and I had a great conversation about how to think about that during times like this. And of course, we're going to get a little bit into the Eigen Layer, some questions about just token design. I don't want to use the word that will get me kicked off the show by Ben and his minions. But before we do that, I do want to bring up, if you are looking to start your options journey, because JJ's got a new video. It's going to be coming out in a week or so. He's going to be going down the next stage in the life cycle of options as you're looking at this cycle. If you're thinking about how to profit off these moves, they're going to be coming maybe as early as the summer or later on in the year. Definitely now is the time to start your options journey. Check out the link in the description to go to CoinCall and set up an account where you can trade spot, perps, obviously options. Has a very elegant interface and one that will be very familiar to you if you've been watching his videos. And obviously it has competitive pricing, so it's a great place to start that journey, whether you're doing paper trades or you're actually ready to start putting some money on the line, start expressing some views of the market. And as I said, you've got time right now, but it's going to be coming up pretty quick. These opportunities, as they hit through maybe something like a liquidity Armageddon moment, or something later on in the year where everything just becomes super cheap. You want to be able to buy it to be able to profit big time. Now is the time to start that journey. But with that, JJ, I want to come back to you and talk a little bit about profit taking, because as I said, we were talking offline about how do you think about profit taking over the cycle. I had actually asked the question thinking more about at the end of the cycle when, you've kind of amassed your profits, they're sitting in crypto. But then there's, obviously interest cycle, which I think you were thinking a little bit more about. And right now you've got this crab walk. So walk me through sort of your framework. How are you thinking about profit taking and sort of the way in which you're thinking about it right now as we go through this, say, call it a lull in Bitcoin price action?
I think it's all centered around Dixie. So it's just the thing we can't get away from, right? It's just kind of this macro elephant in the room that Bitcoin's prices are always dependent upon Dixie. And it becomes extremely evident when you pull up the price scale here. So we see, like, I think as long as Dixie's in this 100 to, say, call it 107 range, right? Like we'll just be going through these mini cycles of large runs up, followed by kind of washouts like we're seeing now when Dixie strengthens. And then say Dixie rolls over from here, drops to 103, that'll probably give the leg up to, say, 80 to 90K. Then Dixie runs back as long as it doesn't lose that 100 range. And if it just keeps going through these cycles of up and down within 100 to 107, we're probably just in like this stair step scenario where Bitcoin looks a lot like the S&P 500, just a slow grind up over time. Then there's the two outlier scenarios that we were discussing yesterday, which is one would be liquidity Armageddon. DXY goes up, above 110. Equity markets crash. Bitcoin probably falls below 50K, maybe below 40K. You get that huge washout. But then we know how that ends, right? Is more liquidity injection, DXY ultimately entering a long-term bear market, and Bitcoin probably going upwards of, say, 250K within the next year or two. The third scenario would be DXY gets preemptively devalued, falls to, say, 90. And then that scenario, I think you see Bitcoin go up to 150 to 200 by next year. So it's kind of like those three scenarios I'm always juggling in my mind, like which one is more likely to play out now. I think if you look at it just from the Bitcoin perspective, how it reacts to the strong Dixie, like obviously we see the Dixie strong today. Bitcoin were to fall below, say, a monthly close below the Bollinger Band here, I think you could probably take profits here, like if you've been long this whole run up, and look to buy back lower. It's just dependent upon your time frame, right? So if you're holding it for the course of years, I think you hold it until you get that 120K plus target sometime in 2025, which I think is inevitable. But it's just a matter of how much volatility you can stomach in the near term, right?
Hmm. Well, speaking of volatility, you just kind of laid out scenarios where you're just looking purely at the Dixie. In those various scenarios, what are you expecting from a volatility standpoint if you're actually looking at the chart?
Well, I think in the scenario where DXY goes over 110 in the coming months, I think you'd see a washout probably below the 200-day moving average. So you probably fall somewhere 45K or below in the coming months, and that would obviously be great. Buy if you're able to get it. In this scenario where DXY just steadily devalues, we probably just continue to move in the way we have, where you just have periods of massive moves up and then months where nothing happens, just chop like this, right? So if that's the scenario we're in, where DXY is going to get preemptively devalued and Bitcoin just slowly walks its way up to 100K, I think this is like kind of the time you'd be looking to enter. So this is basically your invalidation, right? If you see monthly close below here, like this kind of range here, this Bollinger Band, the 100-day moving average, your invalidation is pretty close. So obviously a lot of risk factors heading into tomorrow, but that's the way I would be looking at it if I had no position right now. Is I'd be like, okay, well, my risk is about $1,000. My upside is potentially 30,000, right? So you buy one Bitcoin, and it's a pretty low risk way to do it if you kind of use these technicals as your guide point.
Okay. Ben, I want to get your take. Thinking about those three different scenarios, a sort of a slow grind up, a liquidity washout, and kind of a crazy blow off top. Any perspective? We were just talking about the macro environment changing. Any thoughts there on which one of those scenarios is most likely in your mind based on current events?
Yeah, just I kind of outlined it before. I think if we see the drips that we're starting to see just pick up a little bit of steam and kind of force that capitulation moment in terms of rate expectations, that, hey, you know what, maybe we're not going to have, or maybe the market is overthinking this whole like rate hike thing, and the Fed's going to start reversing its language, and we see it kind of come back down. I think that's going to create some dislocations in the market. And so if I had to lean one way or the other, I would expect kind of the Dixie to run hot. And if we do get that setup and it kind of times up with what we're talking about with Powell and even Yellen a little bit for this month, I would expect DXY to have a little bit of a blow off top and kind of create that new trend and really set up crypto, if I'm going to be frank about it, set up crypto for a really good second half here of the year. And the timing, like let's not forget some of the timing that's coming up. We have a decision with the SEC coming up with an ETH ETF here in, I think, about 3 weeks and a couple days. Expectation is a no. We have the SEC going after Consensus, MetaMask, and Uniswap. And so those dialogues are going to heat up some more. And so we have essentially regulatory pressures surfacing as well. And if we were to kind of compile those all up in terms of timing, May becomes really interesting for that. And it also becomes interesting that if we do get continued sell off and sell pressure, or even just softness in the overall market, it's really queuing up to have a strong move kind of on the tail end of that news. So after that denial with the ETH ETF, my guess is you'll have these filers go after the SEC and kind of push for a decision to take place in the courts. And that's going to be kind of this positive sentiment, because I think a lot of people expect this to ultimately get approved in time. It's going to be a little bit of a battle. Yeah. And so what that moment would really suggest is essentially that capitulation wick to the downside. and now just get ready for this grind higher, this battle before price really starts to run free. So if we have the macro lining up with some of the things we're seeing on the regulatory front, it's just a really interesting confluence of events.
When Grayscale won the SEC case, it was basically like a week after DXY topped. Like the synchronization of these things, I think will probably play out again, where you see some kind of clear DXY top in the coming months, and then you'll see risk assets start to move higher. You'll get those court rulings, and then you'll see kind of that massive leg up like we saw in October at the same time Dixie's falling. I think that's probably going to be a pretty reliable setup again whenever it comes. Could be here, right? Like this could very well be the top of Dixie. We could see it devalue tomorrow for all we know. It's something to be aware of. Like, keep an eye on this correlation because it works. I don't know why. It just does.
And I'd like to make a point here too that look how many viewers we have right now on the show. Go look at some of the more popular influencers. Go see how many views they're having on their posts. Go see the general sentiment of the market right now. There's not that many people paying attention compared to how many were paying attention about 3 months ago. And that is to everybody's advantage that's here right now. JJ and I were discussing like what would be the ultimate fat pitch for the second half of this year. And we were both kind of in agreement that if we do get continued kind of crush in implied volatility, which is what we've been seeing over the last few weeks, and we see the markets kind of crab sideways, it's really a nice setup for ETH calls. Just kind of low capital requirements, out the money, ETH calls. Like that's a fat pitch that you're not going to see again for probably 3 years.
Yeah.
Like this is that moment. And same thing with even Bitcoin and altcoins and, really any part of the market that you've been following and paying attention to. Like this is sort of that moment that not everybody's paying attention. And we say, I know a lot of folks tend to make this comment that like, hey, you were really lucky that you got into the crypto market. You got really lucky with those gains. And you just, you put money in and you just made, 50x your money. Because they're not here, right? You have to be here. You have to be paying attention. You have to be ready. You have to be thinking about these things and be watching them evolve and kind of adapt to it. And right now we're kind of getting this setup that we've really been hoping we would have around this time of the year.
What's really interesting is the connection between volatility and the dollar. So you see how clearly this is the dollar in orange here, and this is the Bitcoin implied volatility index. So March, the dollar bottomed on the exact day that Bitcoin's IV topped. You can see that basically again in February, the dollar topped and then volatility bottomed. You see that in January, the dollar bottomed, volatility topped not long after. So it's really just waiting for the Dixie to calm down. And then I think we'll see that upside, that violent upside move come again. It's just a matter of waiting for it. And Barconi and I were discussing last week. It's like you're basically a sniper. You're just sitting here peeing on yourself, looking at screens all day, waiting for the perfect setup, and then you go. But if you're not here looking at it, you're going to miss it. You're going to miss your setup. So you have to be invested in it. And
you're sleeping in the mud pit as it's raining, and hopefully you don't drown.
Yep.
I'm so glad you guys have brought those visuals to Tuesday morning. I've only had 1 cup of coffee. I needed something to get my blood going. I saw a couple of comments here I wanted to point out. Amit said, first time here, great show, guys. Plenty of alpha. Happy Cake 1000. Pay attention right along with you guys. Your analysis rocks. And we got I'm on 108. I'm still here and listening. I hopefully you guys have enjoyed the colorful language that JJ and Ben just shared. If you're trying to imagine what your next 6 months are going to be looking like, I think JJ put it out there. But the point could not be more important. I mentioned earlier when I talked about coin call, now maybe isn't the time to execute the trade, but now is the time to learn how to execute the trade. And that's why we've been talking about this so often. Yes, they're a sponsor of the show. That's part of our model. But if you want to really make the most out of these cycles, you need to be prepared with the right tools and the right thinking, which is one of the reasons I'm so adamant about people going to watch JJ's episodes right now. Even if it isn't the time to execute, you need to start understanding. So when the time is there, just as JJ talked about, you're sitting in your sniper hole, you're ready to take that shot, you're prepared. you're confident. You're not asking, well, how does the gun work and how do I set a target and all the other things that I don't even know how to do. Anyways, okay, I've actually bled that analogy dry. We still have some time left on the show. I want to get into, excuse me, talk a little about Eigen Layer because I think it feeds into the question of what about these layer 2 altcoin opportunities that are further down the risk curve. So Ben, I want to bring you up because as I just mentioned, Eigen Layer I think it was yesterday, announced their white paper. As part of that, they talked about a token launch. It had the fantastic name that I've already forgotten, which sounded way too technical. But what it did is started on X, this conversation about fully diluted value, about how a lot of these tokens are just really wreaking havoc with the retail market with the fully diluted value that they have. They're going out on a low float. There was Thor Harvingston who published on X a table of 17 altcoins. He noted the average float, the market cap to fully diluted value of these tokens is a mere 13.6%. And they're going to be adding waves and waves of liquidity over the next year plus next couple of years. And this has been going on for a while, and it presents an issue to the market. And so I guess as people that are trying to find high value projects, Ben, how do you think about this kind of game that's being played? Is it a game? Are there value to the way that these products and these projects are structured, or is this just VCs dumping on retail?
Man, it's a tough subject, and I think a lot of it is just a byproduct of not having regulatory clarity. I know it's really boring, but if there was a disclosure system that essentially already exists when it comes to stocks in general, you want to list on certain exchanges or wherever you want to essentially drop your token, like you have these disclosures in place and people can point to it, and now certain parties can be held accountable because you put it in writing. Like we don't really have that. And so I think the big hurdle right now that exists with airdrops and getting a token into market is just how are you going to do it? You're not going to drop all 100% of the token allocation the next day. That's just not going to really have the effect that maybe people would expect. And honestly, I think it actually have a better effect than what we're seeing a lot of times, because you just have this misunderstanding that takes place when it comes to tokens in general of, how many are coming into the market, where is it coming into the market, who has these allocations, and where are they able to sell, but more importantly, where are they able to hedge. So a lot of times, like, you don't have these future markets that you can kind of create, whether a real 1x short on tokens or even synthetic shorts on these positions based upon correlations that exist in the market. So all these things just create these misunderstandings and really not full kind of transparency into what's going on that causes a lot of this, I guess, poor decision making, if you will, in the market. So one thing that that thread I think you mentioned and alluded to with when it came to, I think, 13.6% or something of the total supply is actually in the
they were
market.
complaining about the float being so low for the fully diluted value. There's only 13.6% of those tokens, and these were I don't have the table in front of me, but some larger tokens in terms of probably being pushed out by the market by the marketing machines.
Yeah, and so if you think about what is the chart that tends to be brought up when we think about altcoins, and it's total 3 on TradingView, and it brings the market cap of all tokens outside of, and this includes stablecoins, outside of Bitcoin, Ethereum. And you go ahead and you pull that up and you compare it to a chart of Bitcoin, which is up 30%. I'm sorry, I think I'm looking at this wrong. Up 45% on this chart that I'm showing. But if I go ahead and make it year to date to make it a little bit more easier to compare, it looks like Bitcoin's up 37%, and total 3 is showing 21%. And it doesn't look like it's had that steep of a drawdown. And so that kind of gives this illusion that, you know what, altcoins really aren't that bad. If I go down this risk curve, I can get 10x upside. And look, this is just that difference that exists of me being in an altcoin versus Bitcoin. But look, that's not the real truth here. We actually go ahead and we pull up some of the more popular projects. Like, it does not look as pretty. Like, this is Arbitrum compared to Bitcoin, down 36% on the year. Optimism down 37% on the year. I can't even imagine what some of these other projects are. And if we go ahead and even draw the curtain back to have weekly charts, it still doesn't look that good. And this is a project that's been around for a much longer period of time. The float is rising. It's getting closer to its FTV value, fully diluted value. And so this misconception in the market is causing a lot of confusion and unfortunately a lot of backholders in the process. And so this is why I tend to kind of avoid a lot of altcoins, especially in the pre-halving time period. In the post-halving time period, that is the time to take on some more risk. It's just your duration for that is 6 months essentially of when to do it.
So that's good analysis. I appreciate that breakdown. I think for those who are looking to get into altcoins, it's a difficult game for the reasons you just described. Their lack of disclosures. I imagine there could be pressures from the investors, even if the team doesn't necessarily want to issue a token. Perhaps they're getting pressured to do it because it's such an easy way to get liquidity. But let's get what really kicked this off, which was Eigen Layer. There was a question here coming from Adrian. Thoughts on Eigen Layer? Eigen launch criteria being heavily influenced by regulatory concerns beyond the usual VC soul-sucking narrative. I know I quoted that before. What's your perspective? I don't think you've necessarily had the time to digest exactly what came out, but the intention and the communication on X was that these guys are just rugging the market. They're just doing this for friends to become wealthy, and they don't really care about retail and the adoption there. What is your perspective on that?
A lot of comments, thoughts, questions have arisen essentially in the last 24 hours, at least in my own head. I think when it comes down to it, this whole joke, and I even made a joke of it, of intersubjectivity being like their word of choice. And it's basically, you go ahead, you pull up the definition. It's basically just forming consensus with a group of people in terms of what we think is best. And if we think of what the actual meaning of that is, it's basically a court system. And, Oregon comes to mind. I believe that's the name of the project from way back in the day that tried to create this kind of on-chain judicial system. And the reason they have to do that is just really to protect those that go ahead and stake these tokens. The ability to go ahead and kind of protect and preserve capital has to exist within this project. And so they do need sort of this kind of new consensus, if you will, that's less objective than we're kind of used to. So they try to be creative. They came up with this term that they thought, which I think actually is more philosophical in meaning, but that's besides the point.
Yeah, we can weigh in on the naming at some point, whether it has roots or not.
Yeah, but it is a novel concept, so we should appreciate that, and we should respect that to a degree, and we should kind of see how this evolves. And I think a lot of this is just new in general, so it's really hard to explain. I take issue with the fact that it was their token, their white paper was 43 pages long. Who's reading 40? I'm really curious in crypto Twitter who read all 43 pages, because I didn't.
ChatGPT.
I'll be frank.
Yeah, AI.
Yeah, that's probably about it. And if anything, then just use ChatGPT to go ahead and make a summary, and then that's your white paper. If you want people to read it and you want them to intuitively understand it and essentially buy into what you're trying to sell, make it easily digestible, a little bit of captivating. You don't need to make it academic jargon. You really don't. People aren't going to go ahead and wade through that. So tell us what it is straight up. Be honest with us. And I think the market's pissed off with how they're trying to kind of cloak a little bit of this. So it's an interesting response. Even on Pendle, we saw a big swing in rates for anybody that is in that market. I had Rishi, one of our analysts that helps me out with yields and rates. You can see, I have it up on my screen here. We had a little bit of a bounce in yields, implied yields that existed, kind of had a little bit of a sell-off in a way, if you will. And you could see this one that I'm pulling up right now. You can see how volatile. This is how we measure kind of the volatility of of yield in general on Pendle. And so you can see this big uptick of late. And that was in response to what happened. And so this is opportunity, if you will, in the market. So this is something that you should be cognizant of, is that as these yield markets mature, like when the whole sentiment of the market is really against what just took place, like that's opportunity. And you need to, it's capitulation. Like these teams, they respond and they will adjust the economics of the project, and that's to your benefit. So it's an interesting project. I'm really curious how this evolves. I hope the jargon goes away here. I'm willing to help write it if they want some help there. I will raise my hand on that front.
I've heard ChatGPT is very good at summarizing complex and writing it for fifth graders, so Marconi and others can read it. Okay, so I think just to summarize where we are, alts can be a very difficult game. You don't have the disclosures around the actual token. The fully diluted value isn't always clear. So you need to be aware of that. And as we're moving into this next territory and next period, where if we get the scenario that JJ is talking about, that Ben we're talking about, where we see the capitulation, it's a good time to invest. Now is a good time to be researching, figuring out those projects that could have that potential that you'd want to hold. And this is definitely something to keep in mind. All right, we're near the end of our show, but JJ, as I always do, I want to ask, if you're looking at some options trades, is now a time to sit on your hands, or is now a time to potentially get into the market? I know you're going to be using CoinCall. If anybody's interested in starting to look at those options, definitely check out the link in the description. But JJ, from a Bitcoin perspective, let's start with that. Then we'll look at Ethereum.
So like we said, there's kind of nothing to do right here in this moment. If you wanted to take longer dated bets on Bitcoin, I don't hate that here. If we look at some of the most popular options trades today, we see December $70,000 calls are getting bought up. And that could be attributed to how much volatility has been sucked out of the market. So if you look at these just a month or so ago, let's see what they're trading at now.
Am we seeing the right chart up? Do we have the right chart up? So I'm seeing price, but I'm not sure if you want to have your CoinCall chart up.
Can you see my screen? I have it.
Yeah, I can see it now. Yep.
Okay.
Yep.
So if we look at these $70,000 calls for December, they're currently trading around 10,900. A few hundred of these contracts were bought this morning. So these expire at the end of the year. If you were to look at these back in March, these would have probably ran you around $30,000. So that's a good estimation of how much options pricing can change in a short period of time. But if you want to do something like this, where you buy these and then maybe you sell June $70,000 against them, those are currently trading around 2,500. And then if nothing happens between now and June, that effectively lowers your cost basis on these to around 8,000 or so, which is a lot lower risk. And then if we do get that blow off top scenario to 100K plus later in the year, obviously you'll reap some nice benefits on these calls. I think that implied volatility level, like if we just look at it on the chart, let's pull it up again, just to show how much it was wiped out in recent weeks. So you see again, if we looked at these December expiries at the end of March, they're trading around a score of 80 IV. And now they're just 65. So that's a good indicator of how much
crushed.
Yep, how much has been taken out of it. And I don't think this is a bad risk reward area if you're longer term focused to buy some of these. And
but would you also say there's nothing wrong with sitting on your hands for a little bit to see what the next couple of weeks or even May serves up?
Exactly. Like I said, if you've been itching for a position, if you found yourselves on the sidelines this whole run up, this isn't a bad spot to start adding risk. But otherwise, what you really want to see is Bitcoin either moving up or down in connection with that implied volatility index following along with it, right? So we kind of see that happening now. Actually, looks like the IVs kind of bottomed, at least here temporarily. We have a nice big candle moving up on it, and that's owed to the fact that there's so much open put interest below 60K that if this breaks, we could see some violence here to the downside in the next day or two. So beware. But again, I think
okay, so from a Bitcoin perspective, you just laid out one play, but definitely nothing wrong with sitting on your hands and waiting. Obviously, not investment advice. These are just some perspectives from cartoon characters on the internet. What about from Ethereum perspective? Is that a different play? Are you looking for a capitulation? You've talked about that before. What's your thinking there?
I think it's the same thing. So again, you look at these December contracts, very cheap as opposed to just a month ago. You could buy these 3,500 calls for only 580 that expire at the end of the year. And it's all just waiting on the DXY to roll over. So if we pull up DXY, overlay Ethereum, you could see that the second that DXY rolls over and heads back to 100, might be in a month, might be in 6 months, Ethereum's going to move. So it's just being prepared for that. You could be a little bit more cautious here. You don't have to enter today, right? But I would have my eyes on these contracts, these 3,500 December calls, for whenever we get a more decisive move from the DXY that, hey, this uptrend's over, whether that's the Fed coming out and saying something decisive, or we start to see more liquidity injected into markets. One way or the other, it'll show itself in the DXY price. You see that fall below these trend lines that it gained back in March. I think that's your signal to go long on Ethereum through the end of the year through call options.
All right. That's your bat signal that you got to be looking for. All right, guys. Well, appreciate JJ walking through some positioning here that people can consider. And with that, we're going to wrap up today's show. I think everyone's looking for a little bit of hopium as the prices kind of come down. I can see looking at your charts, it looks like we're close to 60,000 for Bitcoin. And I don't have Ethereum pulled up in front of me. I'm imagining it's kind of the same. But JJ and Ben, thanks for dropping by the studio, dropping down the alpha. Thanks to everyone who joined us today. Love having you guys in the chat. Questions, definitely hit us up on X. If you've got more questions you're hoping we're going to answer, we'll see what we can get to. And as I always do, I'm going to leave you with my PSA, which is definitely have some dry powder. Those opportunities are going to come along, and you're going to need it. This is Marconi White signing off.